Welcome to this video, which is on Wednesday, it's 2nd of July. And what we're going to be doing today is going through some technical analysis lessons for beginners. Now, in terms of technical analysis, there's a lot of traders do a lot of analysis, they test it backwards, it all seems to work, they try it in the real world, it doesn't work. Now, in relation to this, someone wrote to me at the weekend, said you did 7 chart setups at the weekend, and there weren't many inputs in terms of your charting at all, and you gave your specific entry, stop and target levels. And in terms of the charts, you were saying, yeah, most of them are doing what you thought would happen, and one pair is already making a few hundred pips. Now, the important point to keep in mind is not whether the charting is right or wrong, it's that I've given definitive levels of what I'm going to do. And a lot of people who do charting online don't do that. It's all vague. Prices could break up, they could break down, they could go here, they could go there. It isn't definitive. And a lot of the analysis looks really clever. Most of it relies on what we call hindsight bias, which basically focuses on meaningless levels. You've got to trade the chart, okay? If you can't give, an entry, a stop and a target, then basically, what's the point? A lot of people who give analysis do it. They've never traded. You can just see by the way they draw their charts that they haven't. Now, what I want to do is go through some key lessons in basically getting analysis that's going to work for you in the real world. I want to go through a simple equation as well, and also some tips on getting the mindset to make your strategy work in the real world. And before I do this, what I want to do, just want to go through 2 charts. The one I found in a forum, it's typical of many of the charts that I see online. It's of USD CAD. And then I'm just going to do my chart of USD CAD and see if you can spot the difference between the 2 charts. So here they are. The CAD daily, and you find plenty of charts like this, just a random one I found in a forum. And the problem you've got is you've got too many lines, okay? Most of those lines are drawn with what's called a hindsight bias, or just totally meaningless. And when I say meaningless, this candle tail here, let's take this line going down here, okay? What's this got to do with anything? It's coming off a single peak. Doesn't hit any other peaks, maybe those 2 there in the middle. And the rest, it just slices through. The trajectory can be drawn any way you want. It could be down a bit steeper or less steep. Same with this line over here. And it's way away from the price, so what's the point in drawing it? Yeah, I just can't see the logic of that. Also, let's take another line, this one here with this red circle, okay? Slices through a candle bottom here, body, and then through the middle of a body, then through a tail, and then through a tail. And then, for some reason, goes through a load of candles up here. Why is this line relevant in terms of the current price? It's one of those things. I could pick out more examples, but you get the general idea. But what we do have, of course, is we've got where the price could go. Obviously, it could go up. So have you bought the double bottom? Okay. Could go down. Are you going to sell it? Where are you going to sell it? You're going to sell it through the double bottom. So there's a lot of analysis here, but you're none the wiser of what the actual trade is going to be. It's taken a good amount of effort. And of course, you've got the usual Fibonacci retracements, okay, which are drawn on in hindsight, of course. And would you really aim for this retracement down here as a target if you were being bearish? But my point here is it's analysis. And you've got to keep in mind, when you're doing analysis, do not focus too much on the past or making a pattern in your head. Most people want to do this. Why? Well, 1, we would like complication, and 2, just as humans, we are designed to pattern match. You saw my face earlier on. You'll remember what I look like, okay? You made no conscious effort to remember my face. You just pattern matched it. That's what we do when we look at charts very often. We just see patterns that are not there. So you've got a lot of analysis. You have no idea what the trade will be. And also you've got to have a stop in when you enter it and so forth to take into account volatility. This is not particularly helpful, in my view, in doing that. Now, I'm just going to skip to a chart of my analysis of the USD CAD today. My chart of USD CAD, and basically it's the way I do all my charts each day, similar style. But you'll notice I don't use very many lines on my chart at all. Got four, that's it, four big support resistance levels in my view. If I'm in a trade, I'm going to be definitive about where I'm in, okay? Where my stop is, where my target is. The end of the day, I'll update this, okay? But what I'm noting here is that's the key level of support, okay, through these four candles here. Then the next level of support down is going to be the round number at 125, where that down sloping trend line also is. And I've got resistance up at 130. People might see resistance in between, but I've noted 20-day MA. It hasn't been tested since back in June. The dollar is very oversold. It's a mean price. We run through it. I've used volatility and the key level for hedging institutions as my first target. And I've got a second run on target. I've looked at momentum. I've also looked at the weekly chart and the sentiment via the CFTC net traders. But the important point to keep in mind, the chart is clean. It's focused on the here and now. What happened too far in the past, yeah, it doesn't really matter. To me, that makes the chart easy to trade for me in terms of spotting my entry, my stop, and setting my targets. And I'll just update this at the end of the day. I'm a bit annoyed actually the USD CAD is coming back towards my entry at the moment. So we've come off the highs. So we'll see what we're going to do with this chart at the end of the day. But as you can see, it's a clean, simple chart. We'll get back off that short analysis there of USD CAD. Message is obvious, keep it simple. Now, in terms of keeping it simple, if you do, it's going to be a lot easier for you to trade. You're going to see the big levels that matter. It's going to be easier to spot entries, set your stop and set your target. You're going to have much more confidence in your trade. You're not going to end up predicting things. And you're not going to see meaningless levels from the past that have no relevance on the present. Now, a lot of traders want to do complicated analysis. It makes them feel good, makes them feel clever, or makes them feel they've made the effort and they should be rewarded for their effort. You can spend an hour on a chart or a few seconds. You've paid for being right, not the amount of effort you've made. The USD CAD, I'll have decided that when I just look at the chart, what I'm going to do within a few seconds, takes me longer to write the notes. There's no point in spending more time than you need to. It's a complete waste of energy, okay? Now, what I want to talk about now is an equation. It's very famous. It's called the Pareto principle. It's called the 80-20 rule. It's very applicable in Forex trading. Now, Wilfred Pareto, who discovered it back in 1906. He noted 80% of the wealth in Italy was held by just 20% of the population. You saw this 80-20 rule of thumb run through many areas of life. One area that it's very applicable in is business. It's taught in business schools. One of the lessons that is taught is 80% of your profits will come from just 20% of your clients. So focus on the smaller number. Forex trading, that's very true. Focus on the rules in your strategy that matter and the big support and resistance levels. Basically, cut down the inputs to make it more robust. 80-20 rule also comes into play when you're trading the markets, which I've mentioned before. 80% of your profits are probably going to come from 20% of your trades. Anyone who hasn't heard of the 80-20 rule, go back on your trading and you'll find that very often that the trades you had real conviction about did really well for you. Other trades you might have done just to force a trade or weren't so confident in, but you wanted to trade. They're the ones that gave you minor profits or losses. In Forex trading, trading frequency doesn't matter. Only trade the chart patterns you're supremely confident in are going to win. Now, take the 80-20 rule again. And I would say, I'm going to use it a different way this time. In terms of Forex trading success, 20% down to method, 80% down to psychology. You know, a method doesn't work on its own. If you take that USD CAD trade, I've got to decide how much money I'm going to risk on it. I've also got to decide what to do as the trade evolves. Now, it was doing quite nicely this morning. And of course, the USD CAD has come back. Now, Very minor profit. I mean, it's insignificant profit, really. Do I take it? Do I move my stop up for a smaller loss? Do I just hold the trade as is? I've got to decide that. Strategy can't decide it for me. So you have to make your strategy work. And, a lot of talk about trading psychology, but most traders will not accept that it is the major part of making you a successful trader. There's another thing about a lot of this complicated analysis online. Just read the comments underneath, like things like "you're the greatest," "you're an inspiration," "I wish I was as good as you." This is despite the person just does analysis and doesn't trade. People who write those comments never will win at Forex trading. Why? Because they've got no belief in themselves. They're looking up to other people. And if we take the strategy that I use, okay, it's simple. Nothing special in terms of a Forex trader as such. I've learned that sort of strategy. You could learn it, or another strategy that works. Anyone is capable of learning a strategy. We've got to apply it under pressure, uncertainty, and risk. And if you look at trading, a lot of people see it in the wrong way. A lot of people want to mechanicalize it. And it's a bit like thinking about, okay, let's take fixing a car. You call your car mechanic out, got a problem with the car, he comes, he goes through certain steps, he follows them, he gets a result. That doesn't happen in Forex trading. Forex trading I see more as like a game of sport. Let's say you're playing football. When you step on the pitch, you don't go through mechanical steps, do you? You react to a living, breathing environment of humans. That's what Forex trading is. Now, you can keep it simple when you play the game, but you have to react, you have to use your instincts as well, and you have to use, more importantly, your experience. Your experience will help you. A lot of Forex traders who want predictive patterns, don't think about the experience that you have to have of trading the markets to basically win. If you haven't got experience, you're not going to become a successful trader. There's an inevitable learning curve as you get used to how the market subtly move. Then you pick that up after a while. Your instincts come into play with your rules to help you win. Okay, so Forex trading is very much about self-knowledge. Okay, methods are easy to learn. You've got to have self-knowledge, the right psychology. Okay, and when you're trading the Forex markets, you mustn't force yourself upon the market. You can't force anything. You have to go with what you think is correct. And if you're not correct, you have to admit you're wrong. You can't predict what is going to happen. You have to deal with the here and now, as I would call it. And Forex trading, it's a strange combination, for want of a better word. You've got a method that's simple, then you've got your instincts, and you've got your experience, which gives you the instinct to basically apply your trading strategy in the right way. Now, a lot of people write to us and say, we don't focus as much on method here in our videos as mindset. We don't. We do far more videos on mindset than method. Why? Because it's just so important, okay? Now, in terms of what I would say to anyone who wants to learn technical analysis, the rules or the tips I've just given you will help you get a method in place. Then basically it's down to you. Okay, no one is better than you. You are yourself. Okay, we've all got a different profit level we can reach in the market. We're all different. Don't compare yourself to anyone else. Don't think anyone is better than you. Okay, have self-belief and you'll find a profit level in the markets. I can't say that you're going to become the greatest trader ever or you're going to be a losing trader. You'll discover that for yourself. But any trader is capable of making what I would consider to be decent profits from the markets. Now, in terms of, a sort of philosophy I've got in terms of trading the markets, everyone knows I use a lot of references to Eastern psychology in my trading. And, I do, because that is ingrained in my mindset. Okay. And in relation to this, what I want to do is give you 20 quotes from my favourite Chinese philosopher, Lao Tzu. I've related them to Forex trading. Now, if you've traded, you'll relate to every quote. If you haven't traded, just note the quotes because they'll become very relevant. You'll see their significance when you do come to trade the market. So here are the quotes. I hope you enjoy them and I hope you enjoyed the video. Thanks for watching.